I mean, when you consider the expanded unemployment rate, that leaves you with in excess more than 9 million people out of work. These figures, as we were saying just a few minutes earlier, they're no longer a surprise to us. But I guess the real problem here is that you have an economy that cannot absorb these people.
Absolutely. I think if you look at the numbers much more closely, you would see that quite a number of jobs were shared by government, which is in line with where government wants.
I'm going to ask you to just pause for a second here. We're just going to go through the indicators very, very quickly, and we come back because of a technical glitch. Let's quickly look at that and find out what's been happening now with the markets there. The local market closing 0.25% in the red today, and we'll just whisk through these as we sort out those audio cables for the guests we've been interviewing. The damage, as you can see on the JSE, less severe than yesterday. Today, we heard slightly more optimistic comments from US and Chinese officials on trade. That brought some comfort to markets after China retaliated to higher tariffs on its products by hiking tariffs on US goods. So there you have it. The all share about 0.25% in the red. As far as the mining shares are concerned, subdued day for mining shares, tilting into the negative today, and also diversified miners not having too much of a great time. When we look at the commodities table, we had a sudden surge in the Brent crude oil price, by the way. Look at that, 1.67% in the green, $71.11. This came after the Saudi energy minister confirmed that 2 Saudi pipelines had been attacked by drones. So you have that surge in the oil price. And then a quick look at the rand. I mean, the rand weakened more than 1% yesterday, shedding post-election gains. And again, it's that US-China trade war, just, denting emerging markets. But today we see some recovery by 0.75% against the US dollar. So we end up with 14.25 to the dollar, 15.97 to the euro, and 18 rand 39 cents for a British pound. That was a picture on your JSE. Let's get back now to our discussion on the jobs. Thanks indeed for bearing with us. I was saying that you have in excess 9 million people out of work. The problem, as we've seen through many of these releases, is that you have an economy that's simply not absorbing the workforce.
No, absolutely. But I think if you look at the first quarter numbers, there are possibly two big issues. One, there is seasonality in the data. You know, during fourth quarter of every year, there's an increase in terms of hiring, which is normally temporary, which then gets reduced in the first quarter of the year. So that's also part to playing a role in these numbers. But also, if you look at which sectors lost jobs, one of the biggest sectors is public sector, which is in line with where government wants to see employment in that particular sector, which was in the budget where government wants to shrink, at least from a size point of view, so they are not hiring new workers. Once if there are some that retire, they are not hiring if there are people that also resign, just in an effort to try and rein in on that public sector wage bill. So that is quite important, but it also has other implications for the economy as well. We were hoping that economic growth was going to increase on the basis of a consumer spending. Now, if you see unemployment increasing, it means that may not come through. So it further poses downside risks to economic growth for the year as a whole.
Now, I understand the point about the seasonal effect on some of these job sectors, but I want to pull up those big job loss points then. You look at the construction sector, for example. I mean, in excess of 145,000. That alone can't just be seasonal. You have a sector that's so reliant on what both government and the private sector does with building factories, with just investing capital. And that illustrates for you, that number there, the lack of investment in the country. You look at finances, I mean, Isaiah, correct me if I'm wrong, but at one stage, banking really put some jobs on the table a couple of years ago. It's not really happening. And then community services, again, I want to point out that if I remember, we had government saving us to some extent 4 or 5 years ago. Now they're in austerity mode. It's not happening. And then finally, when we look at just households, you can see 31,000 jobs are gone. People are not hiring domestic workers and gardeners, for example, as much as they do. Now, my question to you is, what happened to that investment and job summit that we had? We're not seeing that translate into these sectors, are we?
No, we're not seeing that translate into these numbers yet. But I think if you look at sectors like construction, they depend quite a lot on government spending in terms of investment. Every time historically when government cuts spending, it has tended to be investment spend, not current spending. So that cut in investment spending means that construction works, especially for small contractors, medium contractors, is going to be reduced as well, which means they're also going to reduce the number of people which they employ. As for the investment conference generating employment, I think it's too early. Yep. We shouldn't expect South Africa's economic fortunes to turn all of a sudden now that we have a new president, we have all these concerted efforts. Remember, the damage to the economy was done over the last decade, and it's going to take time to repair institutions. It's going to take time for private sector to have that trust in the administration and the policy direction so that they can start to invest. So we shouldn't really be looking at a change in economic fortunes, at least for this year. The year has already gone halfway, which means the next half of the year is going to be about reconfiguring public sector. We should only start to expect a change in economic activity from next year onwards.
Yeah. And are you suggesting that at that point perhaps we'll be seeing the translation of those pledges that came in last year into some sort of sign that factories are coming up?
Yeah, absolutely. I think that's where we should start expect the actual flows of money into the real economy. But also it depends on what is the global environment look like at that point in time, because you would know that investor sentiment towards emerging markets matters quite a lot, particularly for portfolio inflows. But if you're looking at FDI type of investment, I think that we will start to see from next year onwards.
Isaiah, thanks very much indeed for coming in. Appreciate your insights. That was Isaiah Mhlanga, Chief Executive Economist at Alexander Forbes.